Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. Okay, so what a rebound today, guys. So we've basically rebounded all of yesterday's pullback, which was a bit of a surprise, to be honest. I was expecting a bit more volatility, perhaps a pullback to trend on the back of this. But at this point of time, things are looking a little bit more positive once again. Now, look, all in all, even though we've seen a bullish day today, I'm not really expecting a break higher just yet. It is on the table, but just not quite yet. I kind of feel being end of June, coming into the financial year, quite often we do see a bit of whippy behaviour coming into that. But nonetheless, look, with the US reporting season around the corner, our reporting season in August, we tend to get a lift into that. So at some point soon, I do suspect a break higher. But I'm not sure if this is the one or not. There's a few things I want to see happen before I feel that the selling's over in the short term. But look, let's just look at this technically for the moment. The long-term trend is clearly up. Okay, the short-term trend that I was looking at last week is now broken. Okay, therefore we're now in a pullback phase. All right. Now that pullback phase is looking very unlikely to play out the way things have moved. So we found support at 72 yesterday, and we've rebounded from there. So what I'm looking for now is a breakout. Okay, we're still being squeezed inside a support resistance level. There's 200 points between that. Okay, so at this point of time, look, my thoughts are we'll probably whip sideways between 72 and 74 for a little while. A few of my indicators are still indicating a potential of downward movement. I've got a few conflicting indicators at the moment though, so really just waiting for a few more days to get a clear reading on this overall. In saying that, doesn't mean I'm not trading bullish on stocks and things like that. Certain stocks that have pulled back enough for me that we've jumped in today. Blue Scope, Woodside, BHP. They're all trades we've been looking at today. But from a market point of view, I think a little bit of whippiness here, just in the very, very short term for a few more days, maybe a week, and then we start pushing up into the reporting seasons. Okay, so XJO, yeah, look, as soon as it breaks, then I'll be feeling a very confident short term. I am very confident medium to long term that it will break higher. Okay, that is for sure. S&P 500 looks very, very similar. It went up and had play around with an all-time high. Then you can see here it's pulled back and rebounded very strongly overnight. I'll talk to some of the reasons of why we saw a bit of a pullback, by the way, but I'll just go through the technicals first. You see here we're bouncing off trend. Okay, trend is key. As long as this long-term trend holds and continues, I'm happy to buy into any of these pullbacks. Okay, it just comes down to strategy, really, and that's the big thing you need to worry about here. But they're squeezing. Look, the S&P 500 is once again squeezing into the edge of a pennant pattern, or an ascending triangle pattern, I should say, with resistance up here at all-time highs, and then also support here on the uptrend line. Now, I really did think this time we were going to break a bit lower and come back to 41 or 42 again. 41 or 40.50 again. It didn't happen. We're holding trend at this stage, and that's all I'm going to focus on until this market tells me something different. So look, technicals are still very sound. We're holding trends. Support levels are holding. So from a technical standpoint, things are looking good. The only thing I'll mention is we just saw a massive influx of volatility. That volatility might stay around for a little while. So what I'm saying there is, rather than seeing this sideways movement, we might start to see big movements up, reasonable pullback, like what we saw here. Big movement up, pullback. Big movement up, pullback. And that's what I mean about volatility coming back in, where recently you can see here volatility got very, very low. The movements were very, very small each day. Now we might start getting some bigger whips around again. Okay, so a couple of things happened last week. One was the Fed, and the Fed did come out with a slight change of tone. That change of tone was that we will maybe increase rates in 2023 rather than maybe increase rates in 2024. So it's not really what the Fed announcement did. It's more that there's more of a divide in the Fed and more of a divide in the investor sentiment towards the market and what the Federal Reserve is doing. So what we're starting to see is more and more Fed members come out and say, or, well, rather than say, I should say that they're leaning a bit more hawkish than what they were before, right? Just to put it in simple terms. They're leaning towards rates increasing sooner rather than later. They're leaning towards inflation getting out of control, and that's their commentary. But then on the other side of the Fed, you've got people coming out saying, don't worry about the dot plots, don't worry about the inflation, it's only transitory, and hey, we're not going to likely do a whole lot for the next few years about it. Now, I went and had a look at the Federal Reserve's website the other day. In their mandate, they state that in the long run, okay, not the short term, in the long term, that they want inflation to be at an average of 2%. Now, you've got to remember, before all of this happened, before COVID happened, we had a deflationary period where inflation was running much lower than their average, okay, for years, okay? So now, who cares if inflation's above 2% for a while, right? And that's my attitude towards this, okay? From just purely from a stock market point of view, look, there's all sorts of other economic problems and issues that comes from inflation, especially because we're not seeing wage inflation. I'm not going to go there in this forum. This is more stock market based. From a stock market point of view, who cares if the Fed lets the inflation run for a few years? If anything, that's good for stocks, guys. Okay, it's good for asset prices. It's good for REITs. It's good for everything stock market related almost, right? Until the point that they start rapidly increasing interest rates. So between now and 2023, enjoy the upward movement is what I'm saying here, guys. We're going to have volatile pullbacks along the way. At some point, we'll have a 10% correction in the market. That is just normal market behavior. But what I'm saying here is, if the Fed continues to do this and continues to let inflation run for a little while, we should see a good bump up in the stock market, and this trend will likely continue for at least the rest of this year into maybe middle of next year, depending on the tonality of the central banks of the world. Even the RBA hasn't really indicated that they're going to do a whole lot of changing in monetary policy just yet. Okay, so look, there's a lot to come. Each month, you're always going to have to reform your view again, depending on what the commentary is like. But really, it's all about stimulus. I've said this a million times since mid of last year. It's all about stimulus. It's that balance. Okay, as long as they keep stimulating the economy and the growth doesn't get too far out of control, the inflation doesn't get too far out of control, the market's going to love it. They're going to lap it up, and it's just going to keep running and running and running. All right, that's where I stand at the moment. What we find is, there's a lot of doomsdayers out there, and there's a lot of people out there talking that the market's in a bubble. Well, okay, we know that bubbles exist. We've seen a stock market and housing bubble since 2008, and they just reform, they pop, they reform again, they pop. Okay, that's the cycle. And at the moment, we're only at the beginning of the balloon, guys, okay? We're only at the beginning. And even though some valuations for some companies are stretched, there's still a lot of cheap companies on the ASX at the moment, okay? We are not overstretched by any means, okay? Some stocks are, some aren't. But as a market, we're not overstretched yet, okay? Especially if monetary policy remains this accommodative. Okay, for the next few years. So there's still another at least 2 years, 3 years of strong growth ahead of us, the way things look right now. Okay, now reporting season's around the corner. Every reporting season is going to be super, super important here now. What we're looking for is earnings per share growth, whether it be from US stocks buying back shares again like they were back 5 years ago, or whether it be actual earnings increases, one of the two. That's what we're looking at closely. We want to start seeing earnings, EPS growth, and beating expectations. If we continue to see that theme, and then markets will keep going up. Okay, so that's what we're on the look for. So US infrastructure bill, that's being talked about again later this week. So Biden's going to continue talks there. Look, if they can come to an agreement on how they're going to pay for it, If we can see some form of progress there, then I suspect the market will leap again. Okay, so people are going to stop worrying so much about inflation and the Fed and go, oh well, there's more stimulus coming in. That means more inflation. That means more higher asset prices, and the cycle continues, and the bubble keeps getting pushed higher and higher. Now, China's a big deal at the moment, especially around commodities. Okay, so they've stepped in at a vulnerable time for the market, and they've driven things like copper and metals and iron ore lower. Okay, so whilst you had triple witching on Friday, you had the Fed announcement Thursday. We had that was a perfect timing for them to come in and hit those markets down a bit. They're trying to take a bit of the heat out of the move up. I still believe metals will rebound again. Where I stand at the moment is, even if metals just go sideways from here, they're much higher. They're at all-time highs, pretty much. Which means our miners are super cheap, and the market has mispriced our miners big time. As long as commodities don't crash, okay? If commodities can hold up here for another year or so, which I suspect they will, and that's the definition of inflation, guys. Okay, so if you think inflation's coming, well, it's still coming, isn't it? Right, which means all of these spaces should continue to increase a bit, right? So at the end of the day, let's just keep an eye on that space. But I can say now, if commodities hold here and keep going sideways or even slightly higher, coming into the August reporting, you've got to be looking at the miners, guys. They're super cheap from a forward PE point of view. So something to keep an eye on. But nonetheless, look, China tensions, it's an interesting conversation. It's a big conversation. There's a lot going on there. And I do believe our market is holding back a bit on this. So if we can start to see some easing of tensions there between Australia and China, easing of tensions between US and China, that'll only be very, once again, very good for our market, because we know a lot of stocks are holding back on those tensions. So it's always worth to chat about. But look, all in all, I'll wrap things up here. It's a long video. All in all, at this stage, I can't stress enough, guys, the medium to long-term outlook is still very bullish for us, okay? The underlying tone of the market, there's so much easy money out there right now. I can't see that changing for another year or so. You've got vaccines being rolled out, which means more and more over the next 6 to 12 months, there's going to be more reopening of the economies, more movement, more travel, and things will start normalizing. As that happens, you're going to see phenomenal growth over those periods until it gets to a point where the central banks do step in. And it's when they actually do step in that you're going to start changing your view. In the meantime, as they're talking about stepping in, okay, you're going to see these pullbacks in the market, and I see them as buying opportunities. What you're going to do is wait for your technicals to line up and then go, right? That's what we're looking for. So a break higher again, don't hesitate. For me, I will not be hesitating to buy into strength. I would not be hesitating to buy into a pullback either. Okay, as long as you set your strategies right, and what you want to be doing is making sure you give yourself plenty of time. Okay, if you're trading derivatives, if you're trading options, make sure you give yourself 2-3 months to achieve your goal, okay, in your option strategies. That's what I'm doing at the moment. So if the market does whipsaw around, I've got plenty of time for that upward move to happen. Alright guys, look, I'll wrap it up there, okay? Don't forget, we're here as traders to help. We provide education, we provide support for traders. If you are looking for a bit of help with your trading, definitely give us a ring, right? See what we've got to offer. We put out a lot of recommendations every single day based on what we're seeing here on our desk. There's 5 traders here looking at the market all day, every day, helping clients, looking for trades, putting out recommendations. So if you want to get involved, feel free to give us a call. We are also doing a webcast Thursday night, so there'll be links to that in the newsletter today. So yeah, jump in. We'll give you a bit of a demo on what we're doing. All right. Well, thanks for listening in. Have a great week. Thanks, and bye for now.